She just knows everything, and it's
right.
the all-knowing.
Good morning, everybody, and welcome to the Hardcore Mortgage Real Estate Business Podcast. Today is Wednesday, July 13th, and we're back on the air. We were not on the air last week due to technical difficulties, but our producer, director, Roberto Beauchene, somehow has us up and running. Good morning, Roberto. How are you? He can't talk, everybody. But anyways, we welcome in our panel of John Kolb, Lisa Lawson, Harvey Freed. Maybe Becky's trying to get on. I am Harry Glanz. Hardcore Mortgage Real Estate Business Podcast brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender. 2289 is our NMLS number. And with us today, special guest from RE/MAX First in Harper Woods, Matt Bush. Good morning, Matt.
Hey, Harvey, how are we today? Hey, Harry, how are we? John,
good.
Lisa,
Listen,
it's always a pleasure.
I'm going to tell you what, Matt is a longtime guest on this show. He's been on the podcast. He's been on the Hardcore Mortgage Real Estate Business Show, heard every Saturday morning, 9 to 10 a.m. with Harvey Freed, Becky Alley, John Kolb, Lisa Lawson, myself. Sometimes when I show up, you know how that works. But anyways, welcome, Matt. How's everything going today?
It's going great. I'm actually parked at an inspection in Macomb Township right now. We're looking at a 3,300 square foot house, 5 bedrooms, 5 baths, 3-car garage, corner lot. It's a beautiful day to be doing an inspection.
So the inspection is today. Most realtors maybe go to inspections. How long does an inspection of a house take these days, Matt?
A good one's going to be 2.5 to 3.5 hours. It just depends on the size of the house. I mean, if you're on one of those, maybe a starter home's only going to be 2, just depending on the size. But this one, I mean, like I said, it's 3,300 square feet. So we're going to be parked here. We started at about 9:30. I'm going to be here till about 1. We just have a lot of outlets, a lot of windows, a lot of appliances. You know, we're checking this high to low. Every nook and cranny of this house. We're going to know more about it in the next hour than probably the sellers know about the house. And it's going to be the most important because it's a really big investment. I want my clients to know exactly what they're getting into immediately.
Well, Matt, anybody that's listened to the podcast or the Hardcore Mortgage Real Estate Business Show for the last 23 years knows our position on inspections. We always recommend an inspection. We never recommend to waive an inspection. I know you feel the same way. Explain to everybody why you never waive an inspection.
Yeah, I mean, the inspection, I always say it's the best $300 you'll ever spend because it's that $300 is going to get you out of a $300,000 mistake. People were fast to waive them during the whole bidding frenzy. But, if you don't inspect the house, you don't really know what you're getting into. There's this big thing about sales being as is. In the real estate world, but it really is as is disclosed. And what you're doing is you're hiring an inspector to go over the seller's disclosures, to check what the seller's disclosed, to make sure there aren't any things that you can't see. Us as real estate professionals, we walk through a lot of houses. We've seen a lot of things, but at the end of the day, we are not a substitute for a professional home inspector who's probably has a background in contracting, who knows about remediation, who knows things more than we do. I'm good at my job. I'm fairly confident when I can spot mold, I can spot water damage, but I'm not a contractor. I'm not that guy. So I want to bring somebody in that I can partner with on that side that can point the things out. It's the same reason why, I call Lisa so much. When I have a problem with mortgages or the financial world, she is my first call 24/7. And it's important to have a partner as a home inspector to do that exact same thing.
I think that's wise advice. And that's why, Matt Bush, we never, ever waive an inspection here at Capital Mortgage Funding. We always recommend that. I'm glad you do too. All right, let's go to, we're going to introduce our panel. But the first question to you, Matt Bush, the first question that everybody wants to know right now, and is still a very hot topic. Housing inventory right now, currently in your world, up, down, or relatively the same?
I think I saw something last month that housing inventory was down 23%. But sales are also down 14%. So relatively, it's only down about 9%. So depending on what numbers you're looking, It's still low, but we're also seeing a lack of buyers too. So those things are kind of going hand in hand. So down on really all fronts: buyers, sellers, closings, everything.
So that was the next question, Matt. I'm going to go to our panel. First, Miss Lisa Lawson, same question regarding buyers in your world: up, down, or the same?
I would say there might be just a few less. I think some people were discouraged at the rate hike and the kind of insanity that was out there with the multiple offers. So, a few of them kind of stepped back and said, I'm going to wait this out, whether they're waiting a few months or a year, that situation specific to the individual. But I do think there are a few less buyers. The problem is there's way less inventory. So we still have a lack of inventory versus how many buyers are out there. There just might be not quite as bad as it was previously.
Okay, well, I think I respect that. Going to John Kolb. John Kolb is on our podcast this morning. Good morning, John.
Morning.
Good. John, same question regarding buyers in your world. Buyers, more, less, or the same?
A lot less, in my opinion. I think things have completely slowed down with inflation and the cost of everything. I think everybody is kind of just holding tight to see what happens. And I think it's a lot slower than it has been at the beginning of this year. The first quarter. I don't know. This is a very unique time. Every year is always different, but this is much different than what I've seen in the past.
Mr. Harvey Freed, batting fourth. Our cleanup hitter today is Mr. Harvey Freed. Harvey, got some runners on base. Looking for you to drive them in. Harvey Freed, same question regarding buyers in your world. What are you seeing with you? More buyers, less buyers, or the same?
I'm on John's team on this one. There's less buyers. The cost of gas and food, inflation is real. It's happening. It scared some people out of the marketplace. A lot of young people out there. And I think that there will be a whole bunch of new buyers getting into the marketplace. It's really important that they sit down with some licensed top of the line mortgage people to put their plan together. Still, as Lisa mentioned, and of course, Matt tells you, it's going to be real competitive on those price range homes for the up and coming buyers that are stepping up 300,000 plus, multiple bids still. More inventory out there, but less buyers. Looking for the prices to stabilize going into the fall. That's for sure.
All right. So Matt Bush, there you heard it from our panel and from yourself. Lots of reports, Matt, and our panel just confirmed it. Says the housing market is going to slow down due to inflation, which, by the way, everybody, if you weren't around 40 years ago, it's the highest in 40 years. Mortgage interest rates, although not that high, have doubled. They're in the sixes, essentially doubled in the past 4 months. That is the biggest change. It's not that they've gone up because the rates aren't that high. It's how fast they've gone out and maybe driven people out of the market, Matt Bush. So my next question's to you. We're 4 for 4 on our first two questions. Third question is there a massive slowdown ahead, Matt Bush?
I do not think so. With inventory still down, I think there's a lot of talk right now in the market. And I think we're getting talk fatigue. People are being told that the market's crazy, being told that interest rates are too high, being told that everything's too expensive. I was listening to NPR last week. The average mortgage last week was written at 5.3% was the average interest rate, meaning half the mortgages that were written last week were under 5.3%. So there's still pretty good interest rates out there to be had. What I'm seeing is in March, I was having listings that would be a 50 showings. I'd get 10 offers and it would go like 40,000 over ask. Now that is only like 20 showings with 3 offers with 10,000 over ask. So there is a shift. There is an adjustment. But I think we're really talking ourselves into, oh my God, this is crazy. Oh my God, this is, the worst thing ever. I think it's a whole lot of Chicken Little because we don't have to go too far back to this being the exact same market we were in 2015 when I bought my first house almost 7 years ago to the date. Actually, on Friday, Lisa helped me close on my first house 7 years ago. and where I landed at like a 4.7%. So we're not that far away from where it was not that long ago. And I think that's the realization. People just have a little bit more money that they're spending in their mortgage to where they're going to have a little bit less money on their monthly to do the fix ups, to do the
well,
repair
that
thing
Matt,
they're planning on doing.
and the price of houses are up since 2015
Oh,
too. John,
absolutely.
John wants to
50%,
jump
more.
in. John Kolb's chomping at the bit. Go ahead, John.
I can't wait. And I say this with much love as I can, Matt, but stay in your lane. Interest rates at 5.3. Are you kidding me? No. Those interest rates that you are seeing advertised, and this is how I'm going to tell my clients each and every day, I'm going to go a little Harvey on them. Those interest rates that you're seeing are with multiple points. So if you're talking about what the no point interest rate is, it is closer to 6 right now. 5.3 is with points. Yes, that's the national average, but that's how they like to advertise it. So, like I said, all the love in the world, Matt, just got to bust your chops every so often.
Well, I guess I heard it on the NPR marketplace. This wasn't like an advertisement I heard. It was just kind of a survey of all of that stuff. So I'm just kind of reporting what I'm hearing from NPR.
Yeah, let me reel this back in. Let me go in order here. Let me go back to Lisa Lawson. So, Lisa, we got inventory still down. We've got less buyers. The market is slowing down, but I'm going to use the word. You know how I like to throw words around. Is there going to be a massive slowdown? Matt Bush says no. What does Lisa Lawson say?
I think the word massive is the key word here. Is there going to be a massive slowdown? I agree with Matt. I don't think there's going to be a massive slowdown, but there is going to be a slowdown. I think we're already experiencing it. You know, on the other hand, I think I had 9 people put in offers last weekend, of only which 2 were accepted. That means 7 were not. So, you know, it's still competitive. There's still multiple offers. People are still going above asking and not getting offers accepted. So, you know, is it slowing down a little bit? Yes. Is it massive? Is it going to come to a screeching halt? Absolutely not. People want homes. They need a place to live. Buying a home is still a smarter decision than renting and paying for somebody else's, you know, mortgage payment while you just rent and throw your money away. So I don't think that it's, you know, going to be, catastrophic slowdown as some people are predicting. But yes, it's going to continue to slow down a little bit, just like it has been. But like I said, I don't think it's coming to a screeching halt or anything like that.
So I got a no from Matt. I got a no from Matt Bush. I got a no from Lisa Lawson, Harvey Freed. I'm working with clients right now. And they're still, and this is in Oakland County, they're still getting edged out, Harvey Freed, by cash buyers. Okay. I think there are a lot of pockets that are still have multiple bids, cash buyers. I want to hear your experience, and I want you to answer the question, is there going to be a massive slowdown in your world?
Yeah, there is a massive slowdown hit out there for sure. There's the wealthier folks out there have lost a lot of money in the stock market. They're going to end up waiting 2 more years to see what happens in the future. Also, they don't mind hanging on to their newly refinanced interest rate, Harry, that they just got during the pandemic at 2% to 3%. So the fact that their cost of living has gone down, they're going to sit on the sidelines for a little bit, probably get back into the buying game, either upgrade their home, downsize their home, or sell and move down to the retirement home. So we do see some things definitely slowing down. And what's on the horizon? Again, a little bit of a slowdown. We want to really stress that education, because the new buyers now, Harry, they're a little scared. They're hearing that they're paying a little bit more than the interest rates last year. That's scary to them. And the one thing that they've never experienced is that there's going to be an opportunity to refinance. Again, I'm not saying the rate's going to go down to what we saw during the pandemic, but there will be opportunities for them. A lot of families refinance to a lower rate, or sometimes just even a lower term. So lots of reasons why they're going to be able to refinance their mortgage, and having that licensed professional mortgage banker with all that experience is really going to be who they want in their corner.
Excellent response, Harvey. And Matt, I'm going to go to you, but let me ask Sean Kolb a question. We're going to get into our 3rd and 4th quarter predictions with Matt and with the panel. This is the Hardcore Mortgage Real Estate Business Podcast, brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, equal housing lender, NMLS number 2289. John Kolb, I want your thoughts on a massive slowdown, and then get right into your 3rd and 4th quarter predictions.
My thoughts on a massive slowdown is that, like I said, inflation and, just really, there's still not that many houses to purchase out there. There's more and more coming on the market, more and more staying on the market. but all the good ones have been gobbled up. And more people are now being, asked to go back into the office. So now they can't just work from wherever they want, because they do have to make that trip each and every day to the office. So I think, we just came to a head of, after a pandemic and after people being able to do what they wanted to do, that we're now coming to see to a little bit more realization. And we're just kind of in a flux period where not as much inventory, not as many buyers, not as many sellers, and inflation. And it's going to just cause people to just stop, hold, and pause.
So is that a yes or no, John?
That's
a yes.
Yes.
Okay, it's a yes. I appreciate that. All right, Matt, let's get into it right now. Third and fourth quarter prediction time. Here we are. We're into the second week of the third quarter predictions. Third quarter prediction and fourth quarter prediction for two things. One, will housing inventory go up, and will sales go up? You tell me.
Well, I'm kind of looking at trends right now. Sales prices are up, home sales are down. Month supply has been pretty steady. We're at 1.2% or 1.2 months worth of supply. That's ticked down from 1.4 in April. I think we might take up to 1.5 months of inventory by the end of the fall. Q2 or Q3, Q4, but that's typically when the snowbirds are gone too. So I think that's when your first time home buyers are going to kind of get back in. One of the big things that I think we haven't kind of talked about too much is rent. Rent is typically frozen 12 months behind. So rent is a lagging indicator. So a lot of those people that signed a lease in the last 6 to 8 months, they're going to be up to renew their lease at 30 to 40% more than they were paying in the exact same spot. And that's going to put them into the idea of looking to buy a house, because if you're going to put a 2.5 month or a month and a half security deposit down, in some places that's going to start to equal 3.5 to 5% of what a mortgage might cost. So maybe that same amount of your security deposit with your cleaning fee, with all the application fee, that's going to start getting to that first time home buyer price of 3.5 to 5% down. So maybe we're going to start looking at people who are saying, hey, let's stop paying somebody else's mortgage and let's pay my own, as Lisa was saying. So we might get to closer to a balanced market, but we're not going to get to 2 months of supply for probably another, maybe it's 8 to 12 months, so we're still going to be in a pretty strong seller's market with not a whole lot of inventory. And it's still going to be multiples. I think people are just going to get more picky over what they're choosing.
Excellent statistical information. Lisa Lawson, third and fourth quarter prediction time.
Yeah, I mean, it's basic supply and demand issue. It's basic economics that we all learned in grade school or high school, or, that not enough supply, too much demand. Even if the demand is a little less than it was before, it's still more than the supply that's available. So that isn't going to change anything. And I think that's going to continue in the next, quarter 3 and quarter 4. It may slow down even better, and that gap may become closer and closer, but I don't think it's going to reverse itself in the next, 2 quarters. Absolutely. By the end of the year. Absolutely not.
I agree. This is a very, very smart panel. Harvey Freed, you're the last one on the prediction train, third and fourth quarter prediction time.
Sorry to say that I think it's going to be a little bit slower winter. It's going to emulate a little bit of what 2009 looked like. Again, I think that there'll be some great opportunities. We see a lot of the first-time home buyers really needing to engage in down payment assistance. A lot of them have reached out to their family members and are getting gift letters and some gift funds. Some families even are reaching into their 401k, and borrowers are reaching into their 401k. Again, as Matt mentioned, low inventory, high prices, maybe forcing some of the families out there to consistently overbid and maybe get that offer accepted. So we're asking families if they can come up with a really good plan in case they need $10,000 to $20,000 extra to go ahead and get an offer accepted in today's marketplace. That's what's expected here in the third and fourth quarter.
Excellent overview, everybody. This is the Hardcore Mortgage Real Estate Business Podcast. Today is Wednesday, July 13th. We have Matt Bush on from RE/MAX First and Harper Woods. Matt has been a guest on this podcast and our radio show, the Hardcore Mortgage Real Estate Business Show, heard every Saturday morning, 97.1 FM. Matt, we're going to let you wrap it up. Then I'm going to go to Lisa, Harvey, and John, and I'll get the last word in. But why don't you wrap it up for us? Tell us what you got going. Tell us that you're going to meet Harvey for a video, and then that you're going to be on the show on Saturday morning. Go ahead.
Yeah, so I think me and Harvey are going to try to make a TikTok later, so we'll see how that works. But honestly, everything depends on who you work with and what advice you're getting. Just because you don't necessarily know what you're getting into or you're hearing negative things doesn't necessarily mean there's something negative. I think we're getting a lot of the inspector dads that I am used to, like when you get at a home inspection and dad's there for the first time and he's micro managing every little thing about the house. I think dads are kind of maybe saying, hey, well, interest rates are a little bit high. Maybe we shouldn't worry about it. Then again, if I'm going to put, $6,000 down for a security deposit on an apartment, why not put that money down as a down payment on a house? Maybe I can get some Mishta matching funds for down payment assistance, and I can start building my equity, because this housing shortage isn't going to be done for another 5 to 7 years. So let's start appreciating your asset as opposed to your landlords. So, call me, go to myfirsthouse.com. That's myfirsthouse.com. Let's talk about how I can put you as a first-time home buyer in best position to be successful and start building some generational wealth for you and your family.
Always great to have Matt Bush as a guest on the podcast, on the radio show. Lisa Lawson?
Yeah, I think, the key here is be prepared, get correct information and knowledge, make sure it's current information. It's real easy to Google things on the internet and find some blurb that was written 2 years ago, but make sure that you're speaking to the expert so you can put yourself in the best position to get an offer accepted if you're looking to move, and really evaluate if this is financially the decision for you. Like we've all said, renting is getting expensive, even more expensive, costs a lot of money to get into a rental home or apartment, and that, money could be utilized towards down payment. And like Matt said, there's Mishta programs, but there's other programs. There's Chenoa down payment assistance. There's, National Faith Home Buyers down payment assistance. There's multiple down payment assistance programs that may help you if you're just a little short. So give us a shout, we'll walk you through the process. And if the answer is maybe you don't have quite enough, or maybe your credit isn't there, we'll help you get to that point. We'll help you come up with a game plan, so you'll be ready, the next time your lease is coming due, you'll be ready to buy. So give us a shout.
And of course, Lisa, all the services that we provide are at no charge to the borrowers. Right. And we do not take hostage deposit money like other lenders do. John Cole, final thoughts for the day?
Just what you said, Harry. Just, hey, if you think that you have to call that big budget company that is always advertising just because you like the name, and they go to space, they're not going to do the service that we're going to do for you. We're going to take as much information as we can. We're going to do everything that we can complimentary, get you the best advice, detail products around your needs and wants, not just the needs and wants that they're selling. The product is yours because someone on a stage told them to do so. So, hey, reach out. Let us show you how we do things in the best way we do it.
Appreciate that, John. Harvey Freed, wrap us up.
I was at a closings last week, and it was a lot of fun to get back in the office. And I stuck my head in a few different closings. And I mentioned on the radio last week, it looked like a morgue, looked like they're having a funeral, for crying out loud. Come to Capital Mortgage Funding, get educated. Then you won't look like a sourpuss at your closing. Save money, get educated, have the confidence so that when you're at the closing table, you're smiling like my clients were smiling. It's fun and exciting to become a homeowner. Give us a call, 1-800-LOW-RATE.
Hey, Harvey, you told me a story where you got a loan approved in 6 days. Is that true?
Yes, sir. Yes. Approved, basically clear to close here in 6 business days. Yes.
Yeah, that's wonderful. Good job, Harvey. And when we say that, we typically don't go ahead and tell people that we're getting people approved in 6 days, 5 days, 7 days, because it really doesn't matter. Nobody wants to close that fast, but that's a different show for a different time. For our producer, director, Roberta Beauchene. For Matt Bush, Remax First, Lisa Lawson, the Google of our office, John Kolb, top 1% of all originators in the nation, and Harvey Freed, host with the most hardcore mortgage real estate business show, heard every Saturday morning, 97.1 FM. This is Harry Glanz. And listen, want to let you guys know, our services are complimentary. All we ask is that you let us educate you so you have the best options, and we'll get you into that house. We'll see you soon.